We're so pleased today to host Jason Jessup, the CEO of Magna Mining, who we're hosting for the first time, and Paul Fowler, the CFO. They have two mineral deposits in the wonderful Sudbury nickel copper PGM district, both of which are prior mines. And they have the benefit of Vale and Glencore nearby, whose processing plants are full. So all they have to do is truck ore to the mill to benefit from the mill, smelter, and refineries of their neighbors. And it's possible they could be in production in 12 months. So Jason, I don't want to talk too much, and you tell your story, please.
All right, thanks a lot, John. I really appreciate you allowing us to tell our story. So I will assume that a number of the listeners are brand new to the Magna story, so I'm going to kind of start at the beginning. And Magna, was founded by myself and one other gentleman back in 2016 to focus on nickel copper PGM exploration and development in the Sudbury district. And we truly believe that we will be North America's next nickel and copper producer. A little bit about myself. I've been living in Sudbury for the last 25 years. I've worked for Inco the early part of my career here in Sudbury. I spent 6 years with a junior company called FNX Mining, and I'll talk a little bit about FNX. And then shortly after I left FNX, I started seeing an opportunity again to recreate that energy we had here in Sudbury, and that's what inspired me in 2016 to found Magna. So really our company and myself and 90% of our employees are all based in Sudbury. And I think a lot of investors aren't very familiar with Sudbury. It isn't a jurisdiction that's as well known as the Golden Triangle in BC or Elko, Nevada. It has been dominated for over 130 years by major mining companies. Originally Inco and Falconbridge, which were acquired and now are Vale and Glencore, and then a little junior called FNX Mining that back in the early 2000s bought 5 past producing Inco mines in Sudbury, and through some very, I would say, entrepreneurial and creative mining and exploration, we're able to grow that little company into a producer, and I was part of that group, and we brought 3 of those projects, those past producing mines, back into production, made 3 significant discoveries, and ultimately in 2010 merged with Quadra at a valuation of 1.5 billion. But over the last 100+ years, there hasn't been really any other juniors that investors could invest in Sudbury and really understand the potential. I think FNX gave a little glimpse for about a decade of that, but Quadra FNX was acquired by KGHM, the Polish copper mining company, again, and then three majors were dominating the basin, and along comes Magna. So we are really the only junior that's active with real assets here in the basin. And what are all the advantages? Like, why is Sudbury such a great place to do business and build our company? Well, not just the 100 years of mining history, but it is a city of about 160,000 people. It has, all the infrastructure in place. It has the people in place with the skills that you need to do exploration, to build mines, to operate them successfully. There's a university, 2 colleges here, hospitals, all the mining contractors and equipment suppliers that you would ever need. So it really does have, a great basis that creates low cost operations. And, as we look at other mining projects and companies around the globe, often, big discoveries are happening in very remote locations that require a tremendous amount of infrastructure. Well, we have everything we need right here in Sudbury. And this includes, the only 2 nickel smelters that are currently operating in North America, one owned by Vale, one owned by Glencore. As John mentioned, each of them have large underutilized mills that are hungry for ore. And, that's something that's a huge benefit to Magna and being able to get started into production. at a relatively low capital cost. Now, because of the long history of mining here, there's a community that not only accepts mining, but really needs mining. It benefits from it, and the community here is, for the large part, multi-generationally somehow involved in mining, whether it's directly through the mine operators or through suppliers or other support companies. And so mining is so important here. So people not just accept it, but embrace it. And this includes the First Nation communities. And, in this day and age, we hear too often about First Nation communities that are opposing mining projects, trying to block permitting, not accepting, them to be on their traditional territories. We do not have that situation in Sudbury. There's 3 local First Nations that all benefit from mining. They're very proactive, and actually in Magna's case, I would consider them very good partners that sit at the table with us and help speak to regulators to speed up the process of permitting, and is one of the reasons we were able to move ahead so quickly with Crane Hill and getting our closure plan filed earlier this month. But then why do all these mines exist here? And it really comes down to one simple fact that really no other place in the world has, is the geology and that geological environment and mineral endowment that Sudbury has. And Sudbury is the result of a meteorite impact about 1.85 billion years ago. And this meteorite was such a devastating impact, it actually cracked the Earth's crust and allowed magma to flow up from very deep within inside the Earth. And this is where we have found all this metal, the nickel and copper that's been mined for the last 130 plus years, all around the edge of this basin as these deposits formed right on the edge of that crater. And this is, again, very unique and not well understood generally by the investment public. And Magna's doing our best to re-educate people on how exciting and world-class these deposits can be. So this is an image showing the Sudbury Basin. Now, it was originally much more circular. Over time, it's become elongated. So it's approximately 60 kilometers, approximately east-west, and about roughly 30 kilometers sort of north-south, and all along the edge of this impact structure, which is referred to as the Sudbury Igneous Complex. That's where we find the mines. And as you can see, these crosses here are both active in historic mines all around the basin. Magna has our 2 projects located just to the west of the basin, which is Shakespeare and the Shakespeare mine, very large land package, about 180 square kilometers. And then right on the edge of the Sudbury Igneous Complex, right beside KGHM's Victoria project, and just down the road from Vale's Totten mine, which is in operation, is the Crane Hill mine. And it is our focus right now. It's located about 4 or 5 kilometers off of the Trans-Canada Highway, along the same, very well used, very well conditioned Victoria and Totten mine roads, and just down the road from Vale's Clarabelle Mill, and not very far away either from Glencore's Strathcona Mill. So giving 2 great options to truck ore from Crane Hill to either of these mills, again, creating a very low cost near-term option to start production. The other option is, of course, in the future, building our mill at Shakespeare and then trucking from Crane Hill out to the Shakespeare mill in the future. So Magna's strategy is really based around sort of 3 pillars. First one is near-term production of Crane Hill. We have a significant resource. We have permits in place. It's got great infrastructure, and we believe we can get it into production, very quickly within the next 12 months. Also, a big part of our strategy and a big part of the investment we've made over the last couple of years is on exploration. And we've had some very good success, and we believe that we can find another high-grade deposit on our properties. And that is something that we think could feed into a future mill at Shakespeare, or again into production through selling to one of the local mills. And then the third pillar that really aligns with what we did with our acquisition of Crane Hill are other synergistic acquisitions in the basin. So with 3 major companies operating in the basin, there's a number of non-core assets that we've identified, similar to Crane Hill and the Lonman Canada acquisition we did in 2022, that we believe are an excellent fit for the skill set of our executive team, as well as the assets we have and synergies with Shakespeare. So this is, again, something we're constantly pursuing, and we believe that we can acquire some other very, very accretive acquisitions here in the Sudbury Basin. So a little bit about Crane Hill. There's a view from the air looking at the project. The one thing I do want to point out is an area we've talked a little bit about, and that is this stripped area right here. It's referred to as the 109 footwall zone. So just to give you a sense as we're talking about it in some of the sections, this is a zone that's right behind the Sudbury Igneous Complex, which kind of runs in this direction right here. This comes off. It's a brecciated corridor that is hosting a deposit that's a low sulfide, high PGM type deposit. But just to give some context, it's right on surface. So Crane Hill was a past producing mine. Inco operated it in 3 periods of time over about 80 years, produced just over 20 million tons of ore during those periods of time, with about 95% of that being from underground. It does have a lot of the existing infrastructure still in place as far as road access. There's power lines that cut right over the property. There's a water treatment plant that's still operated by Vale just off of our property that captures all the surface runoff. So all of this together, really adds to the ability to move it forward very quickly into a near-term producer through ore selling. Now, we closed this acquisition of Crane Hill back in 2022, right in early November. Shortly after that, we announced the initial resource, which was based upon all the historic drilling, as well as the drilling that had been done by Lonman prior to or post-closure in 2001, up until the time we acquired it in 2022. This is a significant resource, about 31 million tons of open pit and underground indicated resource, which includes a 14.5 million ton high grade, over 2% nickel equivalent underground resource. Since then, since acquiring the property, we've completed over 19,000 meters of drilling on the property, and we do plan on updating a mineral resource estimate around mid-year this year that will include all of that additional drilling. Last year, we also completed I would call it our first technical study, outline the potential economics of the project. That PEA was announced in July, and it really was set out to understand how much of this 31 million ton resource, indicated resource, could be put into a mine plan and potentially mined. The outcome of that PEA was quite positive, showing potential for a 15-year mine life, fairly modest upfront capital of about 48 million for the advanced exploration phase, and then 81 million pre-production. And that base case was all set around selling life of mine to one of the 2 mills in Sudbury. Now with this, again, we really see potential for additional discoveries in the footwall. It was one of the reasons we were so attracted to this deposit initially. It's a deposit that FNX did want to acquire when they acquired those initial 5 projects. At that time, Inco didn't want to sell it. And one of the reasons he really liked it, which was similar to the other past producers that Inco acquired, is the potential for new discoveries and footwall discoveries, which FNX went on to discover 3 significant footwall deposits at these other properties. But this project, prior to Magna Mining acquiring it, didn't have very much footwall exploration beyond, within 100 meters of the contact itself. So we see it as a great exploration target, and we're actively drilling this year with 2 drills at Crane Hill turning right now, total of about a 25,000 meter budget between Shakespeare and Crane Hill for the year, with most of that being drilled at Crane Hill. So this is a long section, just giving a sense of the deposit. And historic mining went down to about 4,500 feet below surface. Primarily, the 20 million tons that was mined in an area that's called the main zone, sort of on the left-hand side, as you can see here. This is the area where the bulk of 20 million tons, as well as a little bit in this 9400 zone, or the west zone we called it, and then this intermediate zone. That being said, much like the other mines that FNX acquired from Inco, that continued mining, and one of those mines, the McCreedy West mine, is still mining over 20 years after it was acquired by FNX. So there's a lot of remaining resource that wasn't mined by Inco before it was shut down. Some of this has been added with the drilling since the mine shut down, but a lot of it was existing from Inco drilling. And this just shows the example of the amount of mineralization, mineral endowment in these deposits. Now, what we focused on drilling is these footwall zones. And this is really exciting and something that I think, again, the average investor is not aware of. When we talk about high grade in our industry, often it's in context to gold, sometimes in context to copper, and every once in a while you hear something about high grade nickel. Well, these footwall zones that we see in Sudbury, like the 101 footwall, the 105 footwall, and the 109 footwall, which you already identified at Crane Hill, these can be very high grade in nickel, copper, and precious metals, depending on where you are in the deposit and the mineralogy of that deposit. So for example, in the 101 footwall area, this is a zone, and if looking at this screen, it would be coming sort of straight out of the screen towards us. Sort of looking west to east, we're looking north right now along that contact of the Sudbury igneous contact. Well, these zones, the 101, the 105, the 109, are coming out of the screen towards us. And in these zones, these breccia corridors, like I showed on that first picture of Crane Hill, the 105, we're seeing some spectacular grades. For example, in 2023, we drilled some holes such as, this hole 42, which came in at 4.2% nickel, 1.4 copper, 1 gram of precious metals over 27.6 meters. And we have multiple, high grade nickel intersections that are in that 25 to 31, 32 meter range within this zone. And this is very close to surface. These holes are within 300 to 400 feet from surface. So very shallow. This 109 footwall that we were talking about, it is a different style of mineralization. It is what we describe in Sudbury as a low sulfide, high PGM style. So within this breccia corridor, you have class of the country rock, the wall rock that get pulled off, and in that matrix is where you find the mineralization. So you can have blocks of unmineralized rock with this mineralization wrapping around it. Some of it is very rich in sulfides, some of it has minimal sulfides, almost non-visible, but can have very high precious metals. And for example, some of these holes that we drilled, like hole number 13, 0.2% nickel, 0.6 copper, and 11 grams platinum, palladium, gold over 95 meters. But within that, a very high grade massive sulfide core with 2.4% nickel, 4.3% copper, and 37.2 grams of platinum, palladium, gold over 5.1 meters. And this is similar to the styles of mineralization that we mined with FNX on the North Range at the McCreedy West mine and at the Levack mine. And I was operations manager for both of those operations. So very familiar with this style of mineralization. A lot of people would ask us, well, if it was right there, why didn't Inco mine it? Great question. Inco was very much focused on very large tonnages. Back in the 80s and 90s, Inco was mining 40,000 tons a day, primarily from underground in Sudbury. They were looking at, and they had, more than 100 million tons of reserves on the books. So very large scale, take the best stuff first, don't worry about anything else. And they were going after some of these large areas in the main zone where they were just doing bulk mining, high extraction rates, 3,800 tons a day. Some of these other zones, especially with precious metals, were really of no interest to them. They just were not a focus. They were not a priority, focused on getting the biggest, widest zones of massive sulfide out that they could over all their operations. And that's why some of these areas were left behind. And in others were just not well drilled off because, again, they were not interested in precious metals. So very interesting opportunity for us, and very much like what we saw at the other FNX mines when I was with FNX. So how do we get Crane Hill into production? So we talked a little bit about this earlier, but the critical permits are already in place, and that is, existing permits that were from when the mine was in operation. So the ECAs that currently are held by Vale, but are still grandfathered and allow us to move forward. What we needed to do primarily to get back into a state where we can be in production is amend the closure plan. The closure plan is essentially the main government document that says, this is what we want to do, this is how we're going to mine, this is what the impacts will be, and it could be from where we will be building infrastructure, where we will be stockpiling rock, where we will be making excavations on surface, and then how are we going to rehabilitate that at the end of the mine life to take it back to a natural condition. That's really what the closure plan is. And this is often one of the most, I would say, controversial documents when it comes to permitting, because it really speaks to, for all the stakeholders, okay, when you're done mining this, what are we left with? Now, fortunately, because this is a brownfield site, it is very much impacted. And what we are proposing doing is a fairly small impact in a very small footprint. We're going to set up, crushers on surface. We are going to put in a portal. We are going to take the cover off some of the existing vertical infrastructure to dewater. We're going to go in and drive a ramp from surface, mine out ore, bring it to surface, crush it, sample it, put it in a truck, and ship it off site. Very minimal infrastructure required, very simple, and we can remain all on the brownfield impacted site. So we made those amendments to the closure plan. We sent in a notice of material change that we wanted to take the closure plan from a state of closure to a state of production last July. 8 months later, through discussions and some back and forth with the ministry, we received the confirmation that the closure plan had been accepted and filed, which allows us now to go ahead and start breaking rock. Now, there still is a final permit that we require, and that is the permit to take water, which allows to dewater the underground workings because they are flooded since the mine closed, to pump water from the underground into the already existing water treatment system that Vale operates, and discharges through the already approved discharge point. So that permit to take water was applied last summer as well. We've had some back and forth with the ministry, and we expect that to be approved in Q2 of this year. So in the next 3 months or so, we expect to have that in place, and that allows us to start dewatering. The only other really key document we need is we need an agreement to sell our ore from Crane Hill to one of the existing mills in Sudbury. So that has been I would say, as much as you can say working with any major company, it's been a pleasure. We are very close to announcing that. We hope in the next 2 weeks to be able to announce this ore selling agreement, this offtake agreement to sell our ore to one of the existing mills. What I can say is we're very pleased with the terms that we were able to get. They are, to a large degree, better than what I expected and better than what I've experienced in the past, working in Sudbury selling ore to an existing mill. So we're quite excited to have that announced. But once we have that announced, we have our permit to take water, then really there's nothing standing in our way aside from some financing to do the work, to get started with development and shipping ore. Now, we are looking at updating a plan for mining. The PEA, again, did envision a large scale operation with underground production similar to what was historically mined, where we got up to, at the peak, about 4,000 tons a day of mining from underground. What we're looking at right now is a production plan that really takes advantage of some of these high-grade footwall zones, looks at lower tonnage, probably in the range of 1,500 tons a day to 2,000 tons a day, which is still a decent sized underground operation, but using a higher cutoff grade, focusing on higher grade stopes earlier in the mine life. And hopefully then, that'll show strong economics and again, the ability to have a low CapEx and the ability to self-fund, longer term sustainable capital. We're looking at right now a number of options of how we would fund this, and we haven't come up with a number yet of what this new plan capital cost will look like. It will be different than what was in the PEA, and the PEA estimated for this initial advanced exploration, which is currently what we're calling this initial production of 400,000 tons that we put into the closure plan to get started. But that was estimated in the PEA at $48 million, that includes an $8 million contingency. I would expect the updated plan will be somewhere in that range. So we're looking at royalties and streams on the precious metals as potential means to fund that. We're also applied for a number of government grants, and there's a lot of interest and support from the government right now in critical mineral projects like this that are on brownfield sites. So we're pretty optimistic that we're going to get some positive responses back from those applications. So these are, all the work we're doing in the background. Some of it we can talk about, but a lot of it we can't yet. But we do hope to have, a lot more announcements in the next quarter on some of these points. So that was Crane Hill. Now I want to talk a little bit about Shakespeare. Shakespeare was the first asset that the Magna acquired back in 2017. Again, a past producing open pit. It produced through selling ore from that open pit to the Strathcona mill that's now owned by Glencore in Sudbury. Produced about 500,000 tons over 2 years. Fairly small scale production, but it does provide a lot of benefits and de-risking of the project. And it's just an aerial photo from last year of the Crane Hill pit, or sorry, of the Shakespeare pit. So Shakespeare, as I mentioned, this was at one time owned by Falconbridge, and it was optioned by a junior company called Ursa Major that discovered an extension, which is known as the East Zone right now. There's a significant resource at the project. Currently sits at about 16.5 million tons of indicated open pit resource. There is a feasibility study that was completed historically, and we completed another feasibility study in 2022 on the project. It does have all the major permits in place for the construction of a 4,500 ton per day open pit mine, mill, and tailing storage facility. So it really is a strategic asset for us for what we envision doing in the Sudbury Basin. It has also an impact benefit agreement with the Sagamok First Nations, which again just speaks to that social license to operate, and they are very supportive of the project. And the most frequent question I get from them is, when can we go to work on the Shakespeare project? When are you going to start building it? But we see this as a future hub of a hub and spoke production model, potentially combining ore from the Shakespeare open pit, from the Crane Hill underground, and potentially from other properties in the basin into that future 4,500 ton per day mill at Shakespeare. So the feasibility study we completed in 2022 outlined a capital cost of 233 million Canadian to build the mine, mill, and tailing storage facility, which we view as it's somewhat outdated now, but still a fairly reasonable capital cost for a 4,500 ton per day open pit and milling operation. And a lot of that is due to, again, all the benefits of being in Sudbury, being close to grid power, having road access, being a brownfield impacted site already. Really it's just a push back and start mining ore with contractors as we envisioned in the feasibility study, and then building our processing plant. The Crane Hill is part of the PEA. In section 24, we looked at an alternative processing scenario. As reminded, the base case was to sell ore life of mine to one of the existing mills. In that section 24, we ran the economics of just the Crane Hill mine, not of a combined operation, but just of the Crane Hill mine, with a lower milling cost in line with what was estimated for the milling cost of the Shakespeare mill in the 2022 feasibility study. And it did show a large improvement in the NPV 8% of the Crane Hill mine, to the tune of about 280 million Canadian, if we were to process through that Shakespeare mill. So we do see some real synergies, some potential benefits, and we're continuing to do some additional internal studies to figure out exactly what the right blend of Shakespeare and Crane Hill ore could be through a Shakespeare mill, and what potential modifications have to be made to the mill to manage, additional concentrate and higher grade ores. So we do see this as a great option, and having, between the two projects, more than 50 million tons of current indicated resource between open pit and underground, containing more than 650 million pounds of contained nickel and 600 million pounds of contained copper, being in the future a very significant operation or complex, producing both nickel and copper concentrates. So near-term catalysts, again, one of the things we're most focused on is de-risking and getting everything in place to start production at Crane Hill. We are really on the cusp of production there. We see us having all the permits, everything in place. We have contractors selected already. We have definitely advanced on discussions for how we would finance that non-dilutively to move it forward. So we do expect, once we have the permit to take water, to be in a position where, subject to financing, we could start the portal in the first half of this year potentially. I would expect, though, it'll probably happen in the second half of the year, but we are really on the cusp of production. We do have about 6,000 meters of drilling that we've done already this year, 3 drills turning. I would say that I come into work every day like a kid waking up on Christmas morning, to see the exploration vice president and ask him how the drilling went last night, because we have some very, I'd say, key holes that we're drilling right now that we're quite excited to get completed. So, exploration discovery, we think, will be potentially a catalyst this year, and potentially in the next quarter. And then on synergistic acquisitions, we do have our eye on a potential acquisition here in the basin, and it's something that we've been evaluating for a while. We are targeting that we could make another acquisition similar to Crane Hill this year. Obviously, we are very prudent on how much we would pay for anything. I'm a big shareholder in the company. I definitely felt the pain of buying Lonmin Canada at a very low time in our share price, and the amount of dilution that our shareholders, including myself, had, but it was the right thing to do at that time. That being said, I don't see us ever having to raise our market cap again for anything. So there is good potential that we could do another acquisition this year. We do have something in mind that we've been evaluating, and it's never a done deal until it is, but it is a major part of our strategy and could be a potential catalyst later this year. So I guess just to recap, there's a lot of information I provided. Magna Mining, I think, is really uniquely positioned. When you look at a lot of junior companies, we never set out to become a promoter. We never set out to become a company that was, something we could grow fast and hopefully sell to someone. My vision for this company has always been the same. We want to become a real mining company. We want to become a real great Canadian mining company. And we have 2 advanced stage projects that have relatively low capital cost requirements and rapid paths to production. We have world-class exploration targets, especially in the footwall of Crane Hill. Our assets are well understood. They've, both of them have had ore mine that's gone through mills. We understand, the metallurgy, we understand the geomechanics of it. We understand what kind of concentrates can be produced, and they're socially de-risked. The communities are supportive of these projects, and we have, all the major permits with the exception of that permit to take water for Crane Hill already in place. Our team is, like I said, most of our team, probably 90%, are in Sudbury. A number of us, including myself, Dave King, our SVP of Technical Services, Munir Hoxha, our VP of Exploration, Jeff Huffman, our Chief Operating Officer, are all former FNX people. We've done this before. We understand what we're doing. We live here. It's actually, it's pretty fun. It's a great work environment and a great team. And like you say, we've done this before, and we do have this pathway to become a multi-mine hub and spoke producer in the next 3 to 5 years. And that is really, I think, a pretty unique number of attributes for any junior company. And we're just thrilled to be telling the story. I think there's so much excitement here. And the one thing I'm committing to doing this year is just getting the word out about what we're doing here in Sudbury. And as we hit all these milestones that I've outlined, I think people will pay attention, will notice, and will be a producer next year. That is our goal. It's very forward looking, but that is where I want to get to. So that's, John, is the bulk of our presentation. I got a few appendix slides that might be of use if you have some questions, but let me know.
Thank you very much, Jason and Paul. Anyone on the webcast is welcome to introduce questions through the question box. Jason, could you explain how in the past FNX and prospectively your company used contractors, maybe for a while it was Dynatech for FNX, to mine non-union, while Vale and Co. and Falconbridge of Glencore are unionized?
Mm-hmm.
In the US, sometimes the union's very pushy. They're even involved in politics these days, trying to block US steel being bought out by Nippon Steel.
Mm-hmm.
How do you manage labor relations?
Yeah, no, that's a really good question, and it's quite insightful. So I'll speak back to FNX days. So when these mines were acquired, when the FNX mines were acquired, there was no employees with them. They were closed mines, no employees, but they were formerly steel workers mines. The steel worker union represented the workers at those mines. The deal at that time was that steel workers, again, would represent that mine. So although Dynatech came in to do the mining, which is a mining contractor, it partnered with FNX, and FNX was an exploration company prior to acquiring these assets and moving them into production, but they were just an exploration company, and they recognized, they didn't have the operational expertise, so they partnered with a mining contractor, and it was actually a joint venture, 75% FNX, 25% Dynatech. But Dynatech unionized their workers. So there was a steel workers, it was the 2020 union, 2020 local, that unionized, but it was a brand new CBA.
So it was a different deal than Inco had.
Very much so. I remember when I started in 2005, the CBA was about 16 pages long, and it was basically, a lot of the same things you'd have in the Ontario labor laws. So very simple to manage. The workers were essentially, Dynatech contract workers, but they paid union dues, and that was about it. Now, as time evolved, every 3 years there would be a new collective bargaining agreement, and there'd be certain things added to it, and it changed over the years, but it was quite easy to manage. Now, in Sudbury, there is a long history of unionization, and there's the United Auto Workers, and then there was the steel workers, and the unions had, I would say, a challenging past between Inco and Falconbridge over the years. You can imagine the last 130 years, working conditions have changed dramatically and for the better. But to get through all of that, especially back in the 40s and 50s and 60s, a lot of it took very hard strikes. So I would say the CBA is built on a long history of negotiating over probably now 100 years with Vale and Glencore. But yeah, with FNX, it was new. It's still relatively, a 20-year, I guess, agreement for those workers that are still working for KGHM here in Sudbury, but much different than what was or it is at Valley and Glencore. Now with us, for this initial mining we want to do, we will use a contractor. It is advanced exploration in the sense that we are not declaring commercial production. We are doing 400,000 ton test mining sample, which will provide some revenues, but until we
400,000 tons is still 1,100 tons a day over the calendar year. So that's a nice volume.
Yeah, and that'll probably take, I'm guessing, with development and ramp up and all that, 2.5 to 3 years probably to get that initial 400,000 tons mine, give or take. But yeah, in the short term, it'll be all contractors. At some point, maybe we will come to an agreement as well, and we will have a unionized workforce, because Crane Hill was steel workers at the time it closed. So we may take a similar path to what FNX did, where you have a new local with a new collective bargaining agreement, and you start from that. That's possible, but I really don't see any issue, based on my experience with FNX, in having that any challenges, because we're not taking on sort of the existing CBA that, let's say, Vale would have.
As you're aware, the two majors are heavily regulated as to sulfur dioxide emissions.
Mm-hmm.
And Vale shut the smelting and refining in Thompson, Manitoba, rather than spend the money to fix it.
Mm-hmm.
And they shut one of two furnaces in Sudbury rather than spend the money to fix it. And the Newfoundland refinery that was built as a requirement for Voisey's Bay, which is a closed system,
Mm-hmm.
Pressure leach autoclave, doesn't emit anything into the atmosphere. So that runs full. How much capacity does Vale or Glencore have, not in terms of ore processing per day, but SO2 emissions? And if you had 4,500 tons a day from building a Shakespeare mill, how much sulfur would they have to emit to process your ore?
Well, I can't answer that with definitive numbers because I don't have them. What I can tell you is, it's right. Vale did shut down one of their furnaces. It needed some work, and I don't know if they will ever restart it. But they also took on a large project, I know, with more than $1 billion in capital costs, and it was their SO2 abatement program. Anyone who's ever been to Sudbury, or if you Google Sudbury, there's probably going to be two things that come up. One's the Big Nickel, and the other is going to be the Super Stack. And the Super Stack is the smokestack at the Vale's Copper Cliff smelter. And it was built in the 1970s. At the time, I'm not sure now, was one of the tallest freestanding structures in the world. And it was to basically take that sulfur dioxide, put it up higher into the atmosphere to dilute it, to help reduce the impact in the immediate area around Sudbury from that smelting and that SO2. Now they're at a point where there's no SO2 going up that super stack. It's just carbon dioxide, and they actually have to heat the air with natural gas burners in order to just have an updraft in there. So at some point, that super stack will be decommissioned. It will have to be removed because there's not enough heat going through it. And that's a huge accomplishment for Vale, and it's great that they've done that. So, in all the discussions I've had, the issue of SO2 and additional SO2 from our ores has never been brought up. The production in the mill, the Clarabelle mill, has dropped fairly dramatically over the last 10 years, and primarily because of one of their mines, the Stobie mine, which was a mine that ran for over 100 years and connected to the Frood mine, so the Frood Stobie complex was one of the bigger operators for Vale for a long time. But back in, I would say 14 years ago, it was producing 10,000 plus tons per day from underground. That mine shut down in about 2017 or 2018, and really left a gap in their production. Right now, I can tell you that the plan that Vale has publicly talked about for this year leaves a very large gap in their current mill of about 6,000 tons per day of excess capacity that they have. Now they obviously have plans to bring other deposits and ramp up in places and fill that capacity. But right now, with one circuit shut down, their Clarabelle mill can process about 16,000 tons a day. Back when Stobie was running, it was producing, and back when back in the good old days of FNX and high nickel prices in the sort of late 2000s, that mill was processing about 32,000 tons a day. And with less supply and a few mines shutting down, they've shut down a whole circuit. So there's a lot of capacity at the mill. From what I understand, there's still a lot of capacity at the smelter, and they're buying concentrates from outside of Sudbury to fill that smelter. So I don't see it being any kind of bottleneck for Magna.
You have great confidence at 4,500 tons a day they could process 2 or 3 times over.
Yes.
Just as a trivia, our good friend Rob McEwen is a philanthropist, and he's also very interested in the mining industry. He gave $100,000 to an architect that had a concept of making a beacon of light atop the super stack at Sudbury, almost like the torch of the Statue of Liberty in New York Harbor. And when I was down in Brazil last year, Rob wrote me and said, would you please introduce me to Vale's officials? I guess he presented that idea. That it might be that Vale prefers to dismantle the super stack than have a big Statue of Liberty.
Well, I would love to see that. Being in Sudbury, I drive past the super stack on the way to the office every day, and that would be great. But that's the first I've heard of it.
Yeah, feel free to write to Rob at McEwen Mining and ask him about it. I'm sure he'll be glad to tell you about it.
Yeah, definitely.
Once again, all questions from the audience are welcome. And let me just check the question box. In an ideal scenario, where would you like to have Magna mining in 5 years?
In 5 years, I would like Magna to be operating 3 mining operations, producing, selling ore most likely to one of the mills, if not both the mills, and either be wrapping up construction or in construction of Shakespeare. And that's the plan. That's the vision I have. I see right now. I see some opportunity to do that. But yeah, that's where we'd like to be.
Would you describe how the grade and drilling on Crean Hill has differed from the historical resource? The person writing believes that some blocks originally were modeled as waste and have proven to be high grade and very economic. And how will this affect the IRR and resource update? And I realize you have some constraints about 43-101 rules, and you're not supposed to say the IRR before the resources are published.
Yeah, but what I can say, and I've said this before, and I think we put this out in some of our press releases with our drilling results last year, is in certain areas, specifically in our footwall zones, the 101 and the 109 and to some degree the 105, previously the resource we put out was, I would say, it was drilled off at reasonably decent spacing, but it wasn't, there was gaps in it. And in these types of footwall areas, these footwall zones, you can have mineralization wrapping around blocks. And if you model that the same way you would not model typical Sudbury contact mineralization, it's going to often underestimate the grades. So we did quite a bit of drilling in the 101 and the 109. That was two of our main focuses last year. And as I talked a little bit in that press release, some spectacular results, especially in this one area where we're getting multiple intersections over 50 to 100 meters of 30 meters and much wider, where the block model in those areas were not showing grades anywhere near that, just because of a lack of drilling and how the zones can change over 100 meters. So, I do believe that we're going to have much better wireframes, much better constraints on the mineralization in our footwall zones. They will, most likely benefit from that in grade with maybe reduced tons, but at higher grades would be my expectation in the footwall zones. In the general contact zone, and the bulk of our 31 million ton resource between open pit and underground is contact style mineralization. That is the largest percentage by far. Overall, we did some drilling that's going to expand on certain areas, but when you're talking about 31 million ton resource, it's going to be incremental. So there won't be in the overall global resource, there won't be a dramatic change. But in specific zones, such as the 101, the 105, we definitely have seen, and we've shown this with sections in some of our press releases, improvements due to the drilling we did last year.
In terms of other questions, what people are welcome to ask, would you ever see Magna paying a dividend once producing? Thanks. They're not even waiting for you to get permits and revenue. They're already pushing you to have a dividend, Jason.
Well, that's a good question. And I'm a big shareholder and I'm a long-term shareholder. I'm not selling shares. So I have thought about that. We start looking out, not in the near term. We have a lot of growth ahead of us, and that's going to require reinvestment of any profits we make, at least for the next 3 or 4 years. But I do look forward to the point where we can start rewarding our shareholders for their patience and their investment with dividends. And I'm one of those shareholders that I would love to be able to issue a dividend at some point. Like I said, I don't plan on selling any shares. I've said this publicly, and I'll say it here again. Until we're more than $1 billion company, I'm not selling a share. I have no plans on it. I don't need to. I see too much growth potential, and so it is possible that we would do a dividend. Obviously, it's a board level discussion, and we have lots of growth to do before then, but it is something we will talk about in the next 4 or 5 years.
So Jason, I'm trying to be realistic. You would want to have repaid all of your debt to get started or build the mill. And you probably would need to have retained 50 to 100 million of net income before you'd be in a position to pay a dividend. And the best way to raise money is to earn it.
Mm-hmm.
So you're saying in 4 or 5 years, you're not opposed to dividends, but you got to earn the profit first.
Yeah, absolutely. And again, this is something that's a board level discussion at a time when we have more cash than we have used of proceeds. But, it is something that we will talk about, I'm sure, at the board level in 4 or 5 years.
So it's really great to relive a happy experience and have a chat with Jason and Paul that want to make FNX mining all over again. What's Terry McGibbon doing these days? Is he still alive and in good health?
Yeah, I think he's in good health. I met with him down at the BMO conference in February, and I don't see him a lot anymore. He's still keeping busy, working on a private company. He's the chair of it's an exploration company up in Northern Ontario. So yeah, he's still doing well.
Is he one of your directors?
No, he isn't. He isn't a director. I would say that, Terry did great things. We do have some other former FNX people, such as Vern Baker, who's our chairman. and Vern was the VP of operations with
Well,
FNX.
I know Vern from Duluth Metals, and he was a
Yeah.
manager at Goldcorp.
Yeah, exactly.
He
So,
ran Sierra Negra for
no,
Goldcorp.
you know, Terry's he's a friend, and I love giving him updates and talking, but he's not a part of our company.
Well, congratulations, Jason and Paul. Thank you for writing to us. We're just a word of mouth business, and it's virtuous when good companies call us up and want to make a presentation.
Well, I really appreciate it, John, and you know, your questions are great and very thoughtful. So yeah, appreciate doing it.
Super. I look forward to reading the press release when you have the permits in hand and the contract to sell ore.
Yeah, absolutely, and yeah, maybe we'll chat again after that.
Super. Thank you very
All right.
much.
Thanks, John.
Thanks everyone for your interest.